Thank you. We will now begin the question and answer session. Phone callers are requested to immediately mute the audio on their computer webcast and listen attentively to the telephone audio as we begin to progress through the telephone questions. If you would like to ask a question, please press star 1. If you wish to be removed from the queue, please press star 2. We will now take our first question from Laura Hurst from Bloomberg. Please go ahead.
Good morning, Ben, Jessica. Two questions. The first is on the dividend. So last quarter, you flagged that you weren't going to raise the dividend. So why have you? What's changed since then? And why not use a special dividend? Are you not just sort of boxing yourself or a future CEO in by raising it once again at such a big rate? And my second question is on natural gas prices, which are very, very high at the moment in Europe. And, why is this happening? And do you expect this to continue? Thank you.
Thanks very much, Laura. And let me take the first question. Jessica will talk about the second one. Indeed, we felt that our dividend needed to be reset, basically because we saw that the gap between our dividend payout and our free cash flow was simply too large. Now, you could argue that we could also do that by raising shareholder distributions through share buybacks, but I thought that was probably not an optimum mix, probably also not sustainable given the size of the gap. So we wanted to be really clear and signal also to the market the confidence that we have in our prospects and our cash flows, and therefore make a significant portion of that elevated payback, also a payout, also permanent. Special dividend wouldn't do that, of course. That would be a one-off. This is an element that is fixed and subject to further progression, subject to board approval. Jessica?
Great. Good morning, everyone. Welcome to the call. Laura, thank you for the question in terms of some of the dynamics that are playing out in the natural gas markets here in Europe. Combination of factors, very, very high demand is contributing to the increase in prices, but also some supply issues that are happening and some supply dynamics in terms of some of the pricing that's being affected in the marketplace. I think this is normal course of business, if you will, in terms of some seasonality issues and some interim supply disruption issues that I would expect through time will sort itself out. It does point to the need, though, for strong energy policy and ensuring sufficient supplies across the spectrum to support Europe's energy needs. Thank you.
Thank you very much, Laura. Cecilia, can we have the next question, please?
We will now take the next question from Ron Busso from Reuters. Please go ahead.
Thank you. Hi, Ben and Jessica. I have two questions. First of all, about the strategy. You said that the stronger cash will go towards your strategy, but how does that fit with also what you said about following the Dutch court ruling that you'll seek to meet it? I mean, it sounds like you will have to come up with a completely new strategy. And to that point, have you come up with any ideas of how to reduce absolute emissions by 2030? Are you starting to see come up with a plan? And just a second question, smaller, something that really puzzled me is the oil product sales, the fuel sales, around 4.5 million BPD. They're still well below pre-pandemic levels that were almost 6.5 million. Why is that? Thank you.
Yeah, thanks very much, Ron. Let me take the first one, and Jessica will take the second one. Well, I don't think we will come up with a new strategy, Ron. You have to, first of all, bear in mind that the hearings for the court ruling happened before we published our strategy. Our strategy is very much, I think, aligned with what also the plaintiffs would want us to do, which is working on our own emissions reduction and also helping customers reduce emissions. That is what Powering Progress is all about. yes, we will step up to the demand of a 45% reduction in Scope 1 and 2 emissions. We're working very hard to understand whether we can meet that milestone as an interim milestone on our way to zero by 2050. And on the emissions of our customers, of course, as you know, that's not entirely within our control. And you could argue that 45%, asking that of one company, when really the most aggressive players in the market, the EU in this case, will only do half of that, is not only unreasonable, it's also totally ineffective. So therefore, we appeal that part of the strategy. Now, does it mean that we have to change our strategy? No, directionally, we are still in line with what it is that we need to do. And therefore, our strategy of powering progress completely stands. Jessica?
Thank you for the question. In terms of what's happening from a volume perspective in our business, particularly our downstream business, let me talk through a few different dynamics that are happening. If you're looking purely at what's happening in the refining portion in terms of throughput, of course, we've had material changes to our portfolio, so that would be a big part of the story in terms of thinking about the volumes that we're processing, a very different portfolio today than even a couple of years ago. If you're thinking about sales from a marketing perspective, we're seeing very strong return to pre-pandemic levels across the board. Not everywhere, but in many markets, in China and in Russia, for instance, above pandemic levels. But across the board, we're somewhere between 90 and 100% of pre-pandemic levels. So very solid recovery that we're seeing in the retail side. On the lubricant side, similarly, volumes very strong, returning to pre-pandemic levels. The one soft spot that remains for the most part is in the aviation sector that are still markedly below pre-pandemic levels. But on the whole, we're seeing a lot of recovery. And as I said, on average, getting to somewhere to 90 to 100% of pre-pandemic levels.
Thanks, Jessica. Thanks very much, Ron. Cecilia, who's next?
Sarah McFarlane from the Wall Street Journal.
Morning, Ben. Morning, Jessica. I just wanted to expand on Ron's question around the Dutch ruling as to whether you could give any clarity as to how you will accelerate your CO2 reductions, which is, I gather, something beyond where the strategy is at today, that you're looking at accelerating what is in that strategy. And whether asset sales might be the most effective way to do this, or what you think the most effective way to accelerate carbon emissions reductions is. And secondly, I just wanted to ask you about your expectations at COP26. Two issues, really. One would be if there was an agreement for the removal of fossil fuel subsidies, would that have any impact on Shell's financials or any financial implications? And secondly, whether an agreement on Article 6 and cross-border carbon trading would mean anything for Shell. Is there a business opportunity? Just interested in any thoughts around that. Thank you.
Yeah, thanks, Sarah. Great questions. Let me try and take them both. When we said we will accelerate our strategy, of course, you have to bear in mind, as I said also in response to Ron's question, is that our strategy came out after the hearings of the ruling. So therefore, powering progress was not taken into account in the ruling of the Dutch court. What we will be doing is very much stepping up, nevertheless, to that 45% reduction in our Scope 1 emissions. And as I said, we are working on it. As a matter of fact, we are also enforced by the court to work on it at this point in time to see whether we can bring our emissions down already by 2030 to that level. Bearing in mind, we were always going to go to zero by 2050. That's what stepping up means. In terms of working on the emissions of our customers, as I said, that's also another matter. Now, will divestments help? Of course, divestments and closures and conversions, etc., will help, particularly, of course, of our refineries, because most of our Scope 1 and 2 emissions are in refining and in chemicals. I've also seen some articles speculating or suggesting that divesting upstream positions would help. Well, as a matter of fact, that is a very small minority of our emissions. And of course, there are no Scope 3 emissions associated with our upstream in the first place. So divestment is not necessarily an option. On COP26, Yeah, I'm quite hopeful on COP26. Of course, there's lots of expectations, and I hope indeed that governments of the world will deliver against very high expectations. You specifically refer to fossil fuel subsidies. I don't think we ask or want subsidies, but then the definition of subsidies sometimes tends to get stretched quite a bit. So let's be very precise about what it is that is being asked for or not. But subsidizing fossil fuels doesn't necessarily feature in our advocacy. What does feature in our advocacy very strongly, though, is your comment on Article 6. We're not going to get anywhere near the targets of Paris if we do not have an international carbon trading system. That was part of the agreement. That's the Article 6 of the Paris Agreement, and that has not been operationalized now for 5-6 years. If we can't get that done this time around, I would personally be very disappointed, not just for Shell, but for the world. Thanks, Sarah. Cecilia, who's next?
Emily Gosden from The Times, please go ahead.
Morning, thank you very much. First question, I think your total returns to shareholders now, if I've got this right, are going to be about almost $8.5 billion this year, if that is correct. Perhaps you can confirm. That's obviously a big increase on last year and also significantly more now than the $2 to $3 billion you talked about investing in renewables and energy solutions. Will you also, as you accelerate this strategy, be increasing the investment in low carbon? How much do you anticipate spending on that this year? And what does that say about your relative priorities that you appear to be returning so much more to shareholders than you are investing in the green transition? And I also just wonder whether the fact that you are resetting the dividend again within the space of a year, or just over a year, means that perhaps you cut too far a year ago. And just a quick follow-up on COP26, there's obviously lots of people unhappy about Cambo and pushing for a ban on exploration in the UK North Sea. What would be your response to a ban on exploration? Thanks.
Yeah, thanks very much, Emily. I'll take them both this time. So did we cut too far last year? No, absolutely not. I think we made the right move last year. Yeah. So we were facing an unprecedented situation, lots of uncertainty going forward. We had to protect the financial resilience of the company. And that's what we have done. We've taken out $20 billion of outgoings, CapEx cuts, OpEx cuts, working capital containment, and indeed also a cut in outgoings to shareholders. And as a result of that, we have not just preserved the financial resilience of the company, we actually have strengthened it. As Jessica said, we have a $12 billion reduction in debt, and that is while absorbing quite a bit of money in working capital at the same time. So indeed, the company is in very good shape. It's a resilient company with resilient people, resilient assets, very, very well-functioning supply chains. So we are quite happy looking back on what has happened, and we are quite confident looking forward on what's coming next. And therefore, I think it is appropriate to then say, not only do we step up distributions to shareholders, but can we show some of that confidence by making that step up permanent by rebasing the dividend? And that is what you are seeing today. Dividend at a more meaningful level in relation to the free cash flow that we are generating, which is $9.7 billion this quarter. Now, on Cambo, I hear all the calls for stopping exploration, stopping production, etc. But let me be very clear, Emily, on this. As long as the UK still needs oil and gas in its consumption for its society, it's better to produce it in its own backyard. It's better for the climate, it's better for the balance of payments to just import oil and gas, which would be the alternative from around the world, would obviously not serve the climate at all. I know that is, quite often symbolically not what people would like to hear, but symbolism won't help us with climate change. Who's next, Cecilia?
Sorry, the first question about comparison with spending on low carbon.
Sorry, go ahead, Emily. Sorry for missing that.
Sorry, could I go back to
No, I missed one part of your question, indeed. Well, Jessica can fill in on the details of the numbers, but listen, we've been very clear. We stepped back our capex, and most of the step back in capex has been in our legacy businesses. We have protected to a very large degree the spend in renewables and in the energy business of the future. And while we do not anticipate or expect any step up in capex this year, if there will be a step up, which is the next phase of our capital allocation framework, most of that step up will go to our future businesses. Cecilia.
Thanks.
Edwin van der Schoot from The Telegraph, please go ahead.
Yeah, good morning, Ben and Jessica. I was wondering, you mentioned the inauguration of the 10 megawatts electrolyzer, but that seems to fall short of the size of electrolyzers we would need in the short term. So I'd be very curious to know from the two of you what the size of electrolyzers is that we are going to need within the next couple of years, and whether or not they are technically feasible to build in short term. The other question I would like to ask is whether you can clarify on your shale assets in North America. They were core to your strategy not so long ago, but I've also seen speculation by Bloomberg that they might be up for sale. So any clarification on that would be helpful. Thanks.
Let me take the first one, and Jessica will talk about the Permian. The size of electrolyzers, yes. So we've started up a 10 megawatt electrolyzer in our Rhineland refinery. That is the largest in Europe, and it's one of the largest in the world. Now, is that big enough for the sort of electrolyzers that the world is going to need a whole lot of? No, it's not. But obviously, you need to do this one step at a time. We are going to expand that electrolyzer most likely tenfold, so 100 megawatts. And Edwin, you may be aware that we are looking and working very hard on doing a 200 megawatt electrolyzer here in the Netherlands on the Maasvlakte. And ultimately, I think we are thinking of sort of 2 gigawatt electrolyzers when we are looking at the Nord H2 project, which will be hopefully coming on stream at some point in time in the north of the country. So that's the sort of scale you have to think about. So think of a 10 megawatt electrolyzer and say you would use the hydrogen for trucking. Yeah. So what can a 10 megawatt electrolyzer do? A few hundred trucks. Yeah. So if we are going to have tens of thousands of trucks on the road, we need to build a whole lot more. And that is quite often, I think, also insufficiently understood, that the scale that is going to be required and therefore the ramp up that is going to be required is absolutely phenomenal. And while I believe that hydrogen is indeed a very important energy vector for the future, we will only get there with very supportive government policies to drive that build out as well. Jessica?
Great. Thank you, Edwin, for the question. In terms of our shales business, a few words. We've got 3 main basins, if you will, that we work in. We've got the Groundbirch asset, which supports our LNG Canada project. We've got basin activity in Argentina, which we see as kind of an up-and-coming shale province. And then we have our asset in Texas, which is the Permian Basin asset. We spent a lot of time over the last couple of years really improving the performance and operational capability of that asset. We're very pleased with it. Gretchen Watkins, who oversees that business for us, has done a fantastic job of taking costs out. And for that reason, we consider it currently a core part of our upstream portfolio, given the strength of performance and cash delivery that we're seeing today. We're always looking to optimize our assets. There's ongoing swaps that we do to improve the potential and the value creation of that asset. And we'll continue to explore opportunities to make sure we make the most of our portfolio and we make the most of that asset. Thank you.
Thanks, Jessica. Cecilia, who is next?
David Shepherd from Financial Times. Please go ahead.
Good morning, Ben and Jessica. Simple one for me this morning. In raising the dividend, I mean, are you essentially backing stronger oil prices for longer here? When you're looking at this market, we've obviously come back quite dramatically from the depths of the crisis last year. We're now actually higher than we were before the pandemic. Is this essentially a way of signaling to investors that you expect this situation to last. And just to follow up on that slightly around the share price performance, share price is still down about 40% on July 2019, which I think is a fairer comparison than 2020 for obvious reasons. What are you trying to signal long term with these dividends to investors, and how confident are you about bringing them back? Thank you.
Thanks, David. Let me talk about the first one, Jessica talk about the second. So there is an element of confidence, of course, in raising the dividend. It's not just that we found that at this point in time it is too low compared to the cash generation and cash generation potential of the company, but it's also because we have confidence in the future. Now, is that just the oil price? Well, that's a large part of it, but it's in general the entire operation of the company. Oil, gas, chemicals, marketing, etc. And increasingly, you will also see contributions coming from our newer businesses in the portfolio. Now, on oil prices, they are indeed back to where they were before the pandemic. Could that go down? Sure, they could. I think we will probably expect a certain degree of volatility, but I think also the fundamentals today are actually quite supportive. There is probably going to be a few quarters of really tight balances in the market. OPEC cohesion, despite what everything is reported by the newspapers and by others commentators, is actually quite strong. Actually, the volumes coming back from OPEC are relatively modest, and I do not see a lot of non-OPEC players step in and bring a lot new production on stream. So supply is going to be constrained, and demand is actually quite strong, as Jessica said earlier on. We do see very good recovery across all elements of our business, with the exception perhaps of aviation. So I think indeed the fundamentals are looking positive, and therefore we are quite confident that we can do this step up and make it permanent by the dividend. Jessica?
Great set of questions. In terms of what we're looking to signal with the increase in the dividend, first and foremost is that providing a compelling investment case for our shareholders is a top priority for us. We recognize last year was difficult on many fronts. We made a set of, I believe, very prudent decisions to ensure that we managed the company through a very difficult period, internally as well as externally. We've done, I think, overall a fantastic job, as Ben has alluded to, in terms of the quality of our assets, the quality of our people. And the decision that we made and we announced today is a reflection of the strength of our company, the strength of our portfolio, the strength of our delivery, and our ability to weather what was quite a difficult storm over the last 12 months. So the first thing we're trying to signal is that investor returns matter. A compelling investment case is what we want to deliver. We also, of course, want to signal we have confidence in the quality of the company and the quality of our delivery. And we want to signal that we believe this is a resilient amount of dividends going forward through a range of outcomes. As Ben just spoke to different price outlooks or things to consider in terms of the price. We, of course, test across a range of outcomes. We're not betting on the current price to always be the case in terms of when we set the dividend level. This is the dividend level that we believe is resilient, but also importantly, compelling for our investors as we go forward. Thank you.
Thanks, Jessica. Cecilia, who is next?
Rachel Millard from The Telegraph, please go ahead.
Hi, good morning. Thanks very much. First question, are you pleased with the agreement being reached between the US and Germany on Nord Stream 2? And secondly, some companies, Google in particular, are starting to require staff to be vaccinated for returning to the office. Do you have any plans, or are you making vaccines mandatory for staff either returning to the office or at your operations? Thank you.
Yeah, thank you very much, Rachel. I think on Nord Stream 2, I think it's a sensible outcome. It's a practical outcome. Of course, it removes a certain degree of uncertainty that would also affect us. We are a a financial participant in this project, and we would like to rely on the good operations of this project to also, in that sense, get our debt to that project serviced and ultimately repaid. I think also in general, of course, I'm sure there is multiple ways you can look at it from a political perspective, but the agreement that Germany has struck with the United States, with all aspects of it, including quite a few components to do with the Ukraine, I think is a very strong, sensible, pragmatic and balanced way of looking at it. Let's also be honest, Europe does need a significant amount of gas for some time to come. And the lowest carbon supplies of natural gas are going to be pipeline gas, whether we like it or not. That's the reality. So therefore, the continent simply needs that supply as well. Now, in terms of vaccination, we are indeed slowly seeing a return to work. By the way, we've also adopted a very flexible policy for return to work, and that policy is somewhat differently implemented depending on the country in which we operate. As you can imagine, we will follow very much also local guidance and act in line with the circumstances of the country. We don't have mandatory vaccination. We don't think that is appropriate. And in areas where we can, and where vaccination is indeed available, we will facilitate vaccination in the office, at work, simply to provide a convenient service to people. And we encourage it, and we openly talk about the value of being vaccinated, as Jessica and I are. For some areas of the world, of course, where it's more difficult to get access to vaccines, I think our philosophy and where we have been limited to is to basically make a contribution to the COVAX program. We've donated $10 million to make sure that also in the more difficult parts of the world, in terms of supply chain, vaccines can be made available, not just to our own people, by the way, but to those societies. Thank you very much, Rachel. Cecilia, who is next?
Thank you.
Eva Schouten from NUNL, please go ahead.
Hi, good morning. Thank you. I'd like to go back to the court ruling for 1 second, please. Besides the fact that you don't agree with the outcome, is it achievable?
Well, thank you for that question. Listen, there's only so much we can say about the court ruling. I think I've been pretty clear about what it is that we want to do. On the Scope 1 emissions, so the emissions that we produce in our own assets, and predominantly that is, of course, refining and chemicals. So it's altogether 70 million tons of Scope 1 emissions, 10 million tons of Scope 2 emissions. We're going to bring that back to zero. Can we bring that back to 45% less by 2030? That is very much what we are working on. That is also what the court has ordered us to do. And once we have clarity on what is doable and not doable, we will come back and announce that. But that's what we mean by stepping up to the challenge. Can we reduce the emissions of our customers by 45%? That is not 80, but 1,550 million tons of greenhouse gas emissions. That's a different matter. The EU has said they think with all the measures that have been announced by the Fit for 55 package, they can probably do about half of that 45% in the sectors that we serve. So you draw your own conclusions how doable it is to do twice that amount globally, not just in the EU. But that's not the point. I think the point where a single company is being asked to reduce their emissions and the emissions of their customers by 45% is just not an effective way to go about tackling climate change. And that is the reason why we are appealing. But I think I probably said enough about the court case in the Netherlands. I think it would be disrespectful to analyze the court ruling here on an earnings call. But I think we've made ourselves very clear what it is that we are going to do. Thanks very much.
Thank you.
Cecilia, who's next?
We will now take our final question from Robert Perkins from Platts. Please go ahead.
Hi, Jessica and Ben. Questions really on demand. I was wondering if you could sort of tease out your thinking in terms of demand recovery. Now we're sort of a year into the pandemic plus. In terms of behavioural changes and whether you see fuel demands, and I'm thinking particularly oil-sourced fuels here, coming back to pre-pandemic levels. I mean, you've made reference to that before, but I just wondered if you're thinking of, in terms of behavioural changes in the long term, are going to stall any recovery, or you see that coming back fully, and when that might happen. And then secondly, we mentioned the EU's Fit for 55 package. I was just wondering if Shell has been able to model any of the potential demand implications in terms of Shell's regional footprint for fuel supplies, fuel demand. Sorry.
Yeah, thanks very much, Robert. I think I'll probably take them both. Jessica already spoke about the demand recovery and volumes, and let me say again, I think we are seeing a pretty good recovery. Our retail businesses globally is roughly back at 90% of pre-pandemic levels. There's a bit of regional variation, but it's pretty much there. Lubricants is fully back at pre-pandemic levels. Our LNG business is well above pre-pandemic levels when it comes to volumetric recovery. And quite an interesting thing, because you talked about behavioral changes, what we're also seeing is that our non-fuel retailing is well above the levels that we were. So where we have seen a different type of pattern of people picking up groceries on the go in retail stations and us adapting our business models to it, what we see there is a really strong outperformance from historical norms. And that, of course, is something that we will capitalize on going forward with our customer-back strategy. Now, on the Fit for 55 package, as you can imagine, we talked to the Commissioner and the EU executive quite a bit about what we think needs doing. And we have been very much pushing for the sort of measures that have been now incorporated in Fit for 45. We're actually very happy with how the package has come out. It's very clear on there needs to be a sectorial approach. It's very clear not only on pricing of carbon, but also on mandates and very specific, very practical ways of making sure that indeed sectors do decarbonize. So we are very supportive of it. And we're very ready to then also invest to make sure that these changes in the energy system can be delivered on. I think it will be a challenge, absolutely, but we think it's doable, and we've been very vocal in the support that we have been giving. Now, does that mean that our business in the EU is going to change? Absolutely, but it needs to change. It needs to change for the sake of the planet. And I'm very confident that if the Fit for 55 targets are being delivered, that we will thrive in the EU, probably even with a more resilient business than what we have today. But let me leave it at that. And let me again thank you for joining us today. Thanks for your questions. And I hope this really has given you a few more insights into our strategy, the delivery of it, the shareholder distributions, and of course, the very strong performance that we've had in the second quarter of this year. So, wishing you a very pleasant end of the week. And I hope you and your families stay safe and stay very well. Thank you very much.
And this concludes the session. Thank you for your participation. You may now leave the call.